Hello everyone, welcome to Zylostar new weekly market updates, fundamentals and technicals with Mr. Amedian and Mr. Samar and me.
The exponential wildfire in California has brought an approximated loss crossing $40 billion already. Now, what's that doing to markets? We'll see that in a second.
Higher than expected NFP and other employment indicators push back the expectations for Fed rate cut in 2025.
Hello everyone, Samar Aslan is here. I'm a technical analyst at Zylostar, and let's analyze the markets for the upcoming week. Now, looking at the dollar index, as we have analyzed and expected by the previous week, the dollar index is starting to continue its up momentum, and it's moving in this ascending channel, and we can expect a further continuation to the upside from here. Now, going to NASDAQ, also as we anticipated in the previous week, NASDAQ has consolidated, retesting the support, and from here we can expect NASDAQ to retrace this resistance once more before continue its consolidation, resistance and support. There is a good possibility that the price might actually go a little bit higher, filling this fair value gap, also touching the upper trend line of this descending triangle before we can see a break to the downside. Possibly. Till then, we can expect what's going to happen. But this is how analysis is forming on the hour time frame. Now, going to Bitcoin, also as we anticipated, Bitcoin has retraced the levels of 92,000, and from here we can expect a bullish momentum to carry on in this to this resistance of 102,000. And until something fundamental happens, we are not seeing for a break to either sides. Now, Donald Trump is to take charge of the White House the 20th of January, and that might reflect on Bitcoin in a bullish momentum. So what we're looking for is what we're looking at is a very good time to look to be bullish and open a buy position on Bitcoin. Of course, make sure to follow proper risk management strategies. Now, about the wildfire that happened, it has affected the markets very, I won't say impulsively, but it did what it did. As in, it is true that we got positive NFP reports in the job sectors, which should have pushed gold to the downside, and it did actually. However, previous to that report, even the same day, like an hour or two after the reports, we saw gold going up, and it did continue going up, almost touched the levels of 2700s. And that was because of the fundamentals reasons that people are still uncertain how far this wildfire is going to be expanding, and how much loss it approximately can do, and later on how it will affect stock markets and investments. So that's why we were very bullish on gold. In fact, we also did a live trading sessions here with many of our students, and it was a very nice session and very successful, and I would definitely say that. And yeah, we were looking to buy gold, even though we're expecting gold to fall down and give us a better price to buy. So that'll be it for our analysis for the upcoming week. Make sure to apply risk management, and good luck making some revenue.
So guys, now we'll go to the gold market and Euro USD market, and let's check what happening in Euro USD. As we said before, the Euro USD, it's broken our major support, going and creating a new support level in 1.02 to 86. So guys, there is a double bottom in this support, guys, which is like if he break the neck from here, he will come to the other resistance level from here. But what we know, that the double bottom, it's a liquidity regarding the market maker. So for me, I am expecting the market to manipulate this double bottom from here, going to the downside again and again, and especially after what's happening in America and what's happening in California. So now let's go, guys, and check the gold market. Gold market now is in uptrend and price at upper channel line, which is here. Now The market, and I was speaking with you guys, the market now it's in 73. So our analysis it's good, and it's matching the movement on the price. See guys, it's on 74. Now what we are expecting, we are expecting more lower, like till this support to resistance level here, which is 26.56, and from this up channel from here we are waiting him to come to our resistance level, which is 2720. See you guys in the next video.
Hello everyone, hope you are doing well. Once again, we are here to review the financial markets and especially the most vital part of it, which is fundamental. This is Masoud Amidian. I'm senior fundamental analyst at Zylostar head office, which is located in Dubai. So we are gonna review first of all the last week, and I wanna start it with the economic indicators. So last week was a little bit crowded from the US side. We had various economic indicators, which most of them were related to job market in the United States. First and foremost, I want to talk about the NFP, and let's have a look to this data, because as you may know, it's at the center of the attention of the Federal Reserve. About non-farm payroll, it published higher than expected, and estimates on Friday at 5:30 p.m. to Dubai time, it released 256,000, which was pretty shocking for market, and it illustrated the strength of economy more with lower unemployment rate. Also, it dropped to the level of September 2024, as you can see here. Let's have a brief summary about this data. Employment grew in healthcare, government, social assistance, and retail trade in December 2024. The notable gains was in healthcare, which grew around 46,000, and retail trade, which grew around 43,000. Overall, payroll employment rose by 2.2 million in 2024, slower than 3 million, which increased in 2023. Also, we had another economic indicators like ADP and job opening numbers. Last week, ADP published lower than expected and showed a balance in the private sectors. Here also, we have a comment from Nella Richardson, chief economist at ADP, and she mentioned that the labor market downshifted to a more modest pace of growth in the final months of 2024, with a slowdown in both hiring and pay gains. Also, from the job openings printed extremely above estimates, and also for the previous period it revised up from 7.74 million to 7.84 million, and as you can see here again, we faced uptrend for this date, and it reached to 8.1 million for November 2024. Total separation and hires both demoted. We also had Federal Reserve minutes last week. They pointed out that participants expected solid labor market conditions, a slower policy easing, and gradual progress toward 2% inflation. To trade and immigration policies might delay this. The Fed projected a slightly lower GDP growth and higher unemployment due to recent data and policy assumptions. A gradual shift toward a neutral policy stand was deemed appropriate. The final part of the US was about the ISM services PMI. Economic activity in the services sector expanded for the 6th consecutive month in December. Three main subcategories of this data, which is employment, prices, and new orders. Except employment, others developed. Also, we got some news from Japan, which the companies decided to increase the wages for employees, and also some comments from Bank of Japan, which accelerated the probability of rate hike by the central bank. It helped the Japan yen to reach a better rate in front of dollar. So let's have a look for the upcoming week. This week we are going to have more economic indicators than usual. We are going to have CPI and PPI from the United States, which is one of the most crucial economic indicators, which is showing the trend of inflation in this country. And also we are going to have the retail sales number, which is showing us the strength of consumers in that region. Also, we are going to receive the GDP numbers for a Great British Pound, or better say UK, on 16th of January, and also the retail sales number for the UK on 17th of January at 11 a.m. to Dubai time. As I mentioned, our head office is located in Dubai. And also, as usual, we are going to receive the initial jobless claims from the United States, and let's see trend which already started is going to be followed or not. Stay tuned. Don't forget, always mix fundamental and technical together. The result would be amazing.
Thanks guys for watching us. Don't forget to subscribe, follow and put in comments.